Hey, welcome to my channel. In this video, I wanted to show you how to invest your very first $1,000. Now in this video, I assume that you already have $1,000 to invest. However, if you do not have $1,000 to invest right now, then stay tuned for future videos because I have a video coming out pretty soon explaining how to actually make your first $1,000. However, right now, let's get into how to actually invest your first $1,000, where to put the money, what to do with it, what's the game plan. Let's get right into that. Now, what I'm about to tell you is unfortunately going to be a bit of an unpopular opinion, but professionals will tell you that this is the only way to invest your first $1,000. You see, when you first begin, it's tempting to try day trading a little bit. Buy a little here, sell a little there, watching the market, seeing when it goes up and down, buying when it goes up, selling when it goes down. These are the types of rookie mistakes that make people lose a lot of money and also lose faith in the stock market. Instead, you want to come up with a plan like this. I have $1,000 and I want my $1,000, my first investment, to grow over time. I don't want to lose it. I want that $1,000 to grow. So what is the best strategy? Put it into an ETF. An ETF is an exchange traded fund, and I'm going to talk all about that later. But the first thing you should know is that you want your first $1,000 to grow. You want your first $1,000 to grow over time without stress, without worrying, without even having to pay any attention to it. Over time, it will grow slowly and maybe even pretty quickly, especially in this market economy. And you don't have to do any work because you want your $1,000 to be a solid, safe investment. You don't want to play games and buy stocks. You don't know what's going on with them. You want to put your first $1,000 into a solid ETF. It will make you money over time. You'll catch all the greatest opportunities in the market. You won't have to worry, and this will make you a fortune later. Trust me, your first $1,000 will set the standard for the rest of your investment portfolio, and you're going to make money from it. So what is an ETF and how do you buy it? An ETF is a bundle of a lot of different stocks put together to make it so that if something happens to one of the stocks that you bought, nothing happens to you. For example, let's say I have an ETF that's for the automobile industry. This means that I buy a bunch of different stocks that have to do with cars and the automobile industry. I put all those stocks into one stock, and that way when I own that one stock, I own all the different car companies in the world or in a certain sector, and that way I own all of them, and if one of them doesn't do so well, I have no risk to me. Maybe the stock will go down a little bit, but because the other car companies in that stock are going up, I should be pretty safe, and therefore my investment is protected. This is also a way of getting all the best gains from all of those car companies, so that way if one or two of those car companies do really, really well, and the rest of them don't necessarily do so well, I'll still gain some of that momentum and my stock will go up. So the reason ETFs are so good is that not only are they much safer than a standard stock, like for example buying Apple, but also the ETFs have all the benefits of all the companies within those, including dividends and all these other bonuses that we're going to talk about a little bit later. But right now, the most important thing to understand is that an ETF is a bundle that protects your wealth. It allows you to own a lot of different companies, and you own those companies with all the benefits and almost none of the risk. So for your first $1,000, you want to buy an ETF, and luckily the ETFs are bundled for us already. They're just listed as stocks. So let's say, for example, you want to buy the Vanguard S&P 500 ETF. The ticker is VOO, so you just type in a V, an O, and an O on your brokerage. You buy that stock for about $380, or a fractional shares, you can start with $1, and you own 500 companies in the S&P 500. You're safe, you get all the benefits of owning those companies and very few downsides, and that way your money grows over time. Your first $1,000 is protected, you own that ETF, and over time that ETF will grow and you want to put more and more money into that ETF, and that way your first $1,000 is protected, you're good, you're safe, and your money will prosper over time. So your first $1,000, you really want to make sure you put it in a safe place. It's diversified. So for example, ETFs, usually most ETFs are very diversified because of the amount of companies they own. Obviously, some ETFs are safer than others. For example, the S&P 500 ETFs are generally the safest. And once you buy that, you have a list of 500 companies in your portfolio for only $380 a stock. And from there, any risk for those companies is lowered because let's say one of those companies fails, nothing happens to you. The stock is simply replaced within the S&P 500. They put a new stock in, your stock goes up, and you make money over time. So your first 1,000, it's critical to make sure it's a diversified place. It's not an Apple and Amazon and Google and all that. Those are great stocks, but they're not great for your first 1,000. Your first 1,000, you want no stress. You want to never have to look at the market. You can put it in an envelope, ignore your brokerage account for 50 years, open it up, and just be in utter shock at how much your $1,000 is now worth. Now, what I can tell you is that I invested my first $1,000 into the S&P 500 ETF, VOO, which is the ticker VOO, which you can look up in any brokerage. And once I did that, I'm extremely happy with my first investment of $1,000 that I had a while ago. And it's been doing really well, even with this market downturn. Over time, these stocks only go up, especially if they're an ETF and they're a safe investment. It may take a few years to go up, but it will go up over time. And so that's why I recommend that you buy it and hold it. And your first 1,000 you don't play with at all. You just want those solid returns over time without a lot of worry. And that is what I recommend for that. Now, if you're wondering what brokerage to use, there's a lot of really great brokerages. Some of them use partial investments and some of them don't. So for example, some of them may not necessarily allow you to only invest with $1, whereas some of them will allow you to invest with as little as $1 into any stock you want. And so you own partial shares, which is really cool. You don't have to worry as much about investing a large amount in the beginning. You could just invest a little bit, see how it goes. And once you're comfortable, you can invest a little bit more over time. And so if you go down below to where it says brokerages, I'll list a bunch of them, whether they're fractional shares or not, and you can choose which one you want to start investing with and have fun. And hopefully over time, your investments will grow and your first 1,000 will at least be safe no matter what else you do with the rest of your money. Now, I'm going to be making more parts to invest further. I'm also going to be making a video very soon where I discuss how to actually make your first $1,000. Can barely speak. So once you actually make your first $1,000, you can start investing in that. So I'll definitely be making a video very soon in the future about how to make your first 1,000 online, on the side, how to save money, all kinds of tricks and tips. Everything you can think of is going to be on this channel. I promise you that. And of course, I'm also going to be making videos how to invest money after your first 1,000, because that is when you can start having play money. And once you start to invest in other things like Roth IRA and 401k and all this other stuff, you have a lot more options. But your very first 1,000 should 100% be in an ETF, because you don't want to play games with it. You want it to rise. You want to get rich over time and not right away. Nobody gets rich fast unless they're extraordinarily lucky. And unfortunately, with the high luck chance also comes massive negative reward chance, which means basically that if you invest a huge amount of money right now into something that can get you rich fast, the chances are, statistically speaking, you're going to lose all your money instead of getting rich fast. So don't play with get rich fast, play with get rich over time. I'll see you next time. Thank you so much for watching. If you enjoyed this video, give the video a like. And that's it. Thank you so much and have a good day.